right, good morning. Today is March 20th, 2024, and I am back with another edition of the Wednesday Live Show, and today is Fed Day. So it's a big day for the market because everybody is going to be focused on what the Fed says about when they're going to lower interest rates. And so just like we talked about last week, since early last year, it seems like the Fed, or it seems like the expectations of the market have been that the Fed's going to pivot at any moment and lower interest rates, and that's going to be great for everything, the economy and the stock market and all that good stuff. And so, the market's been sort of betting on a Fed pivot for as long as I can remember, and there was some tremendous rallies last year in 2023, based on the idea that the Fed was going to pivot at, the upcoming meeting. And as I recall, they say the market's always right, but as I seem to recall, um, the market was pricing in like the Fed cutting rates, expectations of the Fed cut rates for a very, very long time. They certainly haven't yet, and so now, it just keeps getting pushed back and pushed back, and so I think now the consensus is the first Fed rate hike is going to be in June. So, but we'll have to see because, I mean, here we are in March, um, and so, theoretically, according to they're sort of painted into a corner, obviously, but according to most of the economic statistics, the economy's doing just fine. These interest rates have been elevated for a while, and so why would they pivot? Why would they start lowering rates, right? But we are starting to see some cracks here and there in certain things, and I remember when it wasn't so subjective and debatable of how well the economy was doing. So. And of course, it's an election year, and that makes a huge difference because it's in the best interest of the incumbent administration to, have all the data look just hunky dory, right? So anyway, on to the charts, and as you recall, last weekend or last weekend, what am I saying? Last week, we talked about this particular trend line, which I simply drew between the two lowest points of this year, right? And I did extend on my chart here. I have it extended all the way back to, back to here. And what's interesting, wasn't really paying attention. My original intent was to just have this trend line drawn under this low and this low, the two lowest lows of the year. I mean, those were like the only dips, right? Just little dips, and the market just, kept going. But anyway, what's interesting, I extended it back to here because it kind of makes sense, right? I mean, it's coming off of that November low, or the October low, I should say. But notice that's a 200-day moving average right there. So the trend line, if you extend it back, obviously it doesn't, fit perfectly with anything way back here, but it does kind of coincide with the day that the market, came back above the 200-day moving average. But the important thing to note here is that, just last week on Friday, the market tested that trend line again. So now we got 3 touches on that trend line. And we have what sort of looks like a flat top right here, right? And of course, today being Fed Day, that flat top is flat top right there. So there's a certain level here that the market seems to be sort of struggling with a little bit. Well, I'll tell you what it is. Let's see. That high right there is 51.89, and yesterday's high was 51.80. So just call it 51.90. I'm actually going to save that little. I want to save this little flat top here because man, if this thing breaks out of there, geez, you could actually get a long range day up. So the ball is in Powell's court. But it is kind of interesting how tight this how tight this pattern is right here, right? You got this huge uptrend that's been going on since, last November, and here we are, at the Fed meeting in March, I guess you'd call this the third week of March, and the S&P's kind of been trading sideways here for a couple of weeks, right? Right under that sort of reversal day, which was the high, and so it's coiled up, and so it's not going to surprise me. It's not going to surprise me to see today either, be a breakout up here or a breakdown. Um, yeah, so here's the thing. Eventually, let me move on to the next chart here, right? All right, so this is a longer term view. Eventually this trend line is going to break, right? Because the angle of that trend is unsustainable. Now that doesn't mean that, we can't break out and keep going up, but the angle of that is, in my opinion, is unsustainable. It's just a matter of time before that breaks. But look at that 50-day moving average, right? And so, you could say the market's going up at a 45-degree angle, but the angle of that's based on how far I zoom in and out, in or out on the chart. And so, but I can just tell you the trend lines like that get broken just by virtue of the market trading sideways. So I see that on individual stocks all the time. You get like a really super strong uptrend. The steeper you draw an uptrend line, the more possibility it's going to get violated just by virtue of the market trading sideways. So, but I gotta hand it to the market itself to be able to maintain that steep of a trend line for so long. Quite frankly, it's incredible. But then keep in mind, and I just did this recently, I went over to the CPI inflation calculator and I typed in the all-time high, from the beginning of 2022, and according to the CPI inflation calculator, the S&P would need to be at 53.18 up here just to, basically have the same purchasing power as it did back at the beginning of 2022. So, 53.18 is the new inflation adjusted all-time high. And so, a couple years have gone by here, 1 year, 2 years, 2 years and a quarter practically. And there's been, quite a bit of CPI inflation. And that's assuming that you trust the CPI inflation too. So anyway, at some point, this trend line is going to break. Today, depending on what Powell says, it's actually going to be a pretty exciting day because, like I said on that previous chart, the way that this market is squeezed in this little box here, right? The way that it's squeezed in there, it's either going to break out to a new high today or it's going to break down and break that trend line. But what I was saying before, the way that the 50-day moving average is rising, it's also at like, it's actually running like sort of parallel to this trend line. So that's kind of a big major thing of support. And it's pretty interesting how parallel it is. It's because of the duration of this particular move. So flip over to the weekly chart here. Nothing new. Nothing changes that much from week to week, but you could just you can see the bigger picture, right? There's the pandemic. There's, that was an extremely persistent trend right there. So that's that trend right there, that move off the pandemic low up to the all-time high, and at the beginning of 2022, that's the reason that we have all this inflation. It's because the Fed threw the kitchen sink at the market, right? And the funny thing is it didn't get a whole lot of play. It didn't get a whole lot of discussion, but they actually like admitted that they kind of regretted it, that they overdid it. So that's kind of interesting. But of course, at these Fed press conferences, nobody asks the hard questions, right? Something to note here on the weekly chart. before I forget that you can't see on the screen just yet is the weekly RSI is extremely elevated, right? As a matter of fact, the weekly RSI is approaching pre-pandemic levels. So let me just zoom back another year here. So you remember 2019, right? 2019 was one of those years where, the whole year the market just was up except for, there was like a couple of dips. Looks like three little dips, but I don't think they were significant, to be honest with you. But, zoom back another year. 2018 was I remember 2018 very well because January the market just took off like a rocket, and it was the best January for the market in a bunch of years. And of course, the January indicator says, well, if January's good, then the rest of the year historically turns out really well. And so that whole theory went out the window that particular year because it tanked into the end of the year. So anyway, it's fun to remember that stuff. But the point of it is, wow, and look at well, I had to go back one more year because as I mentioned this on the show last week that this year was kind of reminding me a little bit of 2017 where basically the market just it was really super boring. There wasn't a whole lot of, long range days and wild swings. There wasn't a whole lot of action in 2017. It was like this super boring market year where the market just like kind of crept up and crept up and crept up. And I think there might have been like 3% dip the whole year. And so it was very bizarre. It was an extremely unusual year, and quite frankly, I don't remember why, why it was such an odd year. But imagine that the whole year, and I'm sure most of you guys remember that the market just kind of drifted higher, and there was no excitement or action or big sell-offs or anything. It was just kind of dull. But something to note here is that the weekly RSI is pretty darn elevated right here. It's approaching the level that that it was prior to the pandemic meltdown. So whatever that means, I don't know. But anyway, there's the weekly chart. I'm not gonna save it because I don't want to screw up my time frame. This is another weekly chart zoomed in a little bit. And you can see all the pretty lines I have drawn on here, and they all kind of make sense, right? When we were in this big major uptrend here in 2021, and I did the same thing. I just basically drew the uptrend line across the lows. When it cracked, right, the market went into a pretty significant sell-off. And then of course, all these lines sort of match up, and the October low of 2022 was the low. Interestingly enough, this low was the October low, and then of course last year, we had this little sell-off. I didn't draw a downtrend line across this, but I could have. And so October 2023 was the sort of bottom of the sell-off too. And then November, and I'm trying to remember what happened in November that just set this thing, off. But we hit that October low, didn't quite get down to the major uptrend line, and then it just took off, and it's just been up, up, up ever since. So interesting stuff. Let's see what else I got here. Yeah, I got a bunch of charts here. Well, you can see this one. I don't even have I don't even have this one. I look, have all these different configurations that I look at myself. So I like to look at candlestick charts. This one has a 20-day moving average. It's got the MACD on it here. So, real quick, I'm not even sure why I clicked on that, because what I want to do was I want to look at a few of the Magnificent Seven just to see sort of where we are with these, starting with Apple. And remember I said last week, I said, boy, if you told me that Apple was going to be down significantly off of its high and have a chart that looks this ugly, with the S&P and the Nasdaq at all-time highs, I'd be like, well, how's that possible? So, and I'm still scratching my head on that. But I'm still scratching my head on how it's possible that Apple looks like this, right? Um, and especially given the fact that that S&P chart is such a persistent, straight up, trend like that. And so obviously, the weightings and, the other stocks are making up for it, but it just seems a little odd. It's always like this rotation thing going on. And, so I guess, there's other stocks that are picking up the slack. In particular, of course, this is NVIDIA, obviously. So we're talking about it on CNBC this morning, of course, and I saw they had some sort of a conference and all this stuff, but this is this is the poster child of the current sort of AI mania, which should remind everybody of the dot-com days. And of course, as I mentioned at some point, I do believe AI is going to change the world. It already is. Just like, back during the dot-com days, Cisco routers and high-speed internet connections and all that stuff changed the world, but it still didn't prevent things from getting out of hand, and it didn't prevent the dot-com crash or whatever. So the dot-com bubble and subsequent crash. And so, yeah, it's reminiscent in a lot of different ways of the dot-com bubble. But I still believe that AI is going to, probably, give it a generation, and it's going to replace, half the workforce. I hate to say it. Maybe not half the workforce, but a significant portion of what I would think, sort of the professional and white collar workforce is eventually going to be replaced by AI. That's a scary thought, right? But I mean, AI, if you feed AI, the Library of Congress and the law library and every medical journal that's ever been published, then I think that it's probably, somebody's gonna invent some stuff that has better knowledge than any human. So anyway, I'm not going to talk about AI that much, but look at NVIDIA's kind of, it's in a spot right here where, anything could happen. I mean, that's, huge run up, nice consolidation, but these type of things, I mean, it could, could it go to 1,000? Sure, easy. This thing swings huge, but at some point, there's going to be a day of reckoning, which brings me to, like, you guys remember this SMCI was one of these like super high momentum darling, stocks. I mean, this was the momentum stock du jour, sort of at the same time that Nvidia's been rallying, and you can see now all of a sudden there's some cracks starting to show up in the system, right? And so, I mean, if you look back on this and think about it, here we are 2, 4, 6, 8 days ago, this thing was over $1,200, and a little over a week later, it's down at 900. And so, if you do the percentages, this big gap up here, anybody that bought that big gap up, you got to think in percentage terms. And so, this thing, hey, it may rally back up, but there's probably some, and I'm sure fortunes have been made in this particular stock, but there's always, whenever you get these type of, crazy speculative manias, bubble type stuff in, certain stocks, which I'd have to say that, that this is, even though this one, I've actually seen stuff where SMCI is, if the numbers, like the fundamental numbers, the sales and revenue and profits and all that stuff are more reasonable than a lot of other companies, but I mean, if you just go by like the numbers here, what I'm saying is that some people got hurt pretty bad because you could be down 30% in this stock in a matter of days, right? So that's kind of stuff that happens, during these kind of speculative manias. Um, I was looking through some charts this morning, and I don't know why this stock charts run so slow now. So, when I first started using this, I had a few, I had a few little issues and qualms about it, and the more that I use, it seems like it's kind of gotten worse. I mean, yeah, it's super cool and it's great for what it does. I love it, but there's a few things like it used to be when I typed in a symbol and hit enter, it instantly popped up, and now it takes a little bit. Interestingly enough, look at this outside reversal bar on AMD. Wow. And so this is pretty interesting right here because I've seen a million charts like this over the years, and so what happens is, I mean, it's sitting right on this 50-day. Well, well, I don't want to look at, well, I guess, yeah, I'll look at SOXL. Same exact identical pattern as AMD. That's kind of interesting, to be honest with you, because NVIDIA doesn't look like that, right? And NVIDIA doesn't have that pattern, but AMD and I guess SMH is the actual. It's interesting that SMH, looks a little bit different. I mean, it's got sort of because the SOXL is leveraged, and then of course there's the SOXS, but semiconductors, look at this. Semiconductors, this is a triple. This is triple long, or I'm sorry, triple short, and SOXL is triple long, I guess. Yeah. But so anyway, the leveraged ETFs aren't supposed to look like, the normal charts because they're leveraged, and so it's just interesting how it looks very similar to AMD. So, well, let's see. We looked at Apple, and there's Google. Oh, geez. In my defense, half of the keys on my keyboard are just blank because I've worn the paint off of them typing so much. But yeah, so there's Google. Apple's had a big sell down. Google had the sell down and now has rallied back up, and so that's kind of how the market works. It rotates, money rotates around, and these magnificent seven, I don't know if they even call them that anymore, but I'm sure they do. I'll be honest with you, I put CNBC on and I mute it, and I very rarely have the sound on at all. I kind of just, honestly, I kind of have it on just so I can look at like the numbers and the bug and stuff, because people have always made fun of me for watching CNBC for all these years, but it's a way to sort of keep tabs in your subconscious of what stuff is doing that you don't really follow. Like I don't really follow oil on a day-to-day basis. Actually, I shouldn't say that, because with CNBC on every day, I mean, I got a pretty good idea what the price of oil is from day to day. So, oil and gold and Bitcoin and, stocks like, different stocks that I don't really care about that much. It's still useful. It's still useful to have CNBC on because you get an idea of, you sort of get an idea of what's going on. Anyway, I forget my point. Oh, well, so my point was like Tesla, for instance. I just saw it go by on the ticker, and it's been a little while since I pulled up the chart of Tesla, and boy, I got to tell you, I was looking at this I think last weekend, and a lot of money has been made in Tesla over the years. The early adopters and the people that bought a long time ago and this and that, but I have to say, and it's like anything, you can, if you drop a horizontal line at the current price, you can you can basically, I used to do this too a lot. Drop a horizontal line at the current price, and then anybody that bought above that line is underwater, and anybody that bought below that line is okay. And so you can see where the line in the sand is right here. Right? And so, well, let me just illustrate my purpose here. So, um, horizontal line, drop it at the current price. There you go. So that's basically, this is basically what I'm talking about. You just put it right at the, well, current price is 171. So we'll just put it right there. Yeah, so you can see that you can see the between, this is 2020 back here. I zoomed this chart way back. So anybody anybody that's decided, at some point after, 2021 to that it was a good time to invest in Tesla, um, it wasn't, be honest with you, except for like the buyers on this dip right here. They're doing okay. Especially since, it tagged $100. But I mean, look at this. It was $400, 400 to 100. That's a big deal. And then, of course, it tripled, and then it lost, almost half its value. And so everything's sort of relative, right? A lot of people don't, they don't break it down to something that simple. I mean, to me, it's that simple, and I remember years ago, we've been doing this broadcast for a decade now. It used to be called a radio show. We used to do it on Wednesday nights, and we used to have hundreds of people tuned in, and I used to have other people doing it with me. But anyway, long story short is I remember, years ago bringing up the concept of, hey, is Tesla a good stock? And my whole concept is like, Tesla is a good stock if you bought it below this line, and Tesla's not a good stock if you bought it above this line. And it's as simple as that. I mean, it really is. It's as simple as that because that is that's what determines everything. That's what, most people care about, right? So I'm not knocking this. I mean, this little sort of dip right here, there was like a little sort of pullback there, and there's like this little sort of, I don't know what it is that I don't know exactly what it is that you can attribute like this sort of nasty price action to, but let me get rid of that line. You got a couple of lows right there, that you can draw a trend line, and so it looks like it needs a little bit. If I zoom in on this chart, it looks like you need a little bit of upside, but quite frankly, I mean, this thing is practically tradable. This thing's practically, you could pick a spot here. It looks like it wants to rally up to meet the 50-day, but in theory, this would be a pretty good spot to go long this stock with a stop right under this recent low. And so it's either going to get some traction to the upside, and for all you know, whoops, I didn't. That's what these stock charts drive me crazy, because they always do something I don't want them to do. In theory, and of course, I'm just looking at this objectively, right? So Elon Musk and Tesla and stuff is probably the most controversial stock on planet Earth. In fact, I'm sure it is. Let me just save this. Oh, gee. See, there's another thing that I don't like about this. I already had Tesla in my watch list. in my watch list. I added a couple lines to the chart, and now I have to save it again. And so that means in my watch list, it's going to be duplicated. One from before and one now. So that's another little pitfall of stock charts. But they sent me a survey yesterday, and at first I thought, well, maybe I should fill it out, and but I'm not going to waste my time because they've been around since the .com days. So they were the pioneers of stock charts on the internet. So anyhow, there's your big pattern right there. Um, I wouldn't be afraid to go long this stock here, just sort of based on the symmetry of this little pattern right back here and this pattern here, and that's about as close as you're going to get to a decent spot right there to be able to get that. So that's my idea. I'm gonna leave these on here, and real quick before I do anything else, I'm gonna change that just for just so that when we look at this next week, if I remember to look at this next week or like next month or whatever, there's the marks right there. So this is well, actually, my original idea, and this is always a pretty good idea, is if you zoom in on this thing, instead of just buying it, pulling the trigger and saying I'm going to buy it, you look at this pattern and you say, well, in order for it to get to 200, it's got to get above this high from back here. All right, let me just zoom out. This is where I intended to draw that line. So right over the high of that day, which is 175, call it, would actually be something doesn't seem right, because this particular day right here, the high, the high is 176, right? So in theory, 176 and change, and so in theory, you'd want to set a buy for 177. If that gets filled, you'd set a stop for down here. Sorry about all this. So I mean, I was zoomed out when the original idea came, and so it's just and quite frankly, haven't been following this or anything. I don't know anything about it other than the fact that I can tell you based on this little chart pattern, it's in a pretty decent, it's in a decent risk reward setup at this point, is all I can say. So maybe maybe some money will rotate into this as it rotates around the market. So I don't want to look at, I don't want to go through and look at a whole bunch of these things, but real quick before I wrap this up, I must have got off on a tangent today. I did want to look at the Qs. Qs are in an interesting sort of pattern. The uptrend is not quite as defined, but then again, you can always just pick a couple of lows and oh look, now my now my trend line is defaulting to red. Let me put it back on black here. So yeah, so there's you can see that if you had done something similar to what I did with the S&P, drew it across the prior lows, that like I said, by virtue of trading sideways, it's violating that. So I'm gonna back it down. Yeah, it's looking a little I'll tell you, the best trend line for the Qs right now is right there. You take it across those lows right there, and so that gives a little bit of play there, right? And so that makes more sense than anything. So I'm not going to save that, but you can see the 50-day is actually above that now. Qs have been trading sideways for quite some time too, which is kind of interesting. So anyway, I don't want to keep you any longer. So there's some charts that are potentially setting up. I mean, that's what you want to see. Actually, let me do one more. I just wanted to look at ARK because, as you know, ARK is sort of my proxy for how speculative the market environment currently is compared to in the past. And so you can see what's happening there. It's kind of just biding its time, trading sideways here, and so it's holding above the 200-day. So this is an interesting chart because down the road, I mean, we're going back years here. So down the road, we're going to see if this turns into like a big sort of bottoming pattern, or, if it heads down here. So it's kind of a proxy, I think, for what you might call animal spirits. So it's always good to look at. But anyways, I don't want to go over my time. So whatever I didn't cover, we'll talk about next week. Thanks for tuning in. I'll see you back here next week, same time, same place.